Hey there, Velocity Bankers. Listen, today we're going to explore the future of eliminating your debt and building your wealth, velocity banking style. We're going to discuss the trends and predictions that could shape this financial strategy in the coming years. And as we all know, right, velocity banking is a powerful tool for achieving that financial freedom. And it's essential to stay updated on the latest in development. So without further ado, let's go ahead and dive right in. Now, you all know about the rise of Fintech and the impact that it's had on velocity banking, right? It's even automated velocity banking, right? As you can see here. In recent years, we've seen a surge in financial technology, or what they're calling Fintech, which has revolutionized the way we manage our finances. With the rise of digital banking, mobile apps, and online platforms, of course, the Money Max account, it's now easier and more simple than ever before to implement these velocity banking strategies. Now, in this section, what I want to do is discuss how these advancements have made velocity banking more accessible and efficient for you individuals, business owners, heads of households, if you're looking to pay off your debt faster and grow your wealth. Let me go ahead and give you an example of that. Yes, let's start with Plastique. Now, of course, that's a third-party app that'll help you to pay your bills through your credit card, even if the institution does not accept your credit card. How does it do that? Well, it does that through technology, right? And so I will say this, Plastique loves Discover Card and MasterCard. Okay, people are paying off their mortgages with Discover Card and MasterCard through Plastique, and they're paying off all sorts of other loans, and so you can do the same. Now, it does have, I believe, a 2.5% transaction fee, 2.5% transaction fee, but I want you to know this, that 2%, right, watch this, is this 2%, right, multiplied by 1,000, right? Let's say your transaction fee, come on now, is $1,000. That's going to be 2%. So what's 2% of $1,000? Let's go ahead and do it. 1, 2, all right. Oh, don't forget this. We got to multiply the 2, so it's going to be 20. What's that? $20. Is that right? And yes, I did stop this video to do the calculation, but listen, it's only because I wanted to be right with you guys, all right? Look, $1,000 multiplied by 2% is $20. Now, the way I calculated this, right? Watch this. 10% of 1,000 is what? $100, right? You just move the decimal over 1. Okay, 1% of $1,000 is what? $10. And of course, 2% will be $20. Now, let me ask you a question. Would you find value in having to pay that transaction through your credit card and having to pay the $20 for that transaction? Or would you rather continue to pay and have even more massive interest rates, more massive interest dollars that you have to spend as well? That's something that I'm going to have to leave you to, but I know you know math, so let's go forward. Chunking principle. Now, this is not a third-party app, but it is a principle that we are going to demonstrate to you and how the power of that is going to revolutionize your bank, right? So before we get to that, though, let's go ahead and let you know that there are banks that offer cash sweep features. One of them is actually listed right here. If you're involved in a HELOC, if you know about the First-Lien HELOC, and even if you don't know about the First-Lien HELOC, we'd love to show you. Go ahead and click that link right there to get more information on that First-Lien HELOC. My goodness, you know, let me show you something. Let me tell you the difference between a second lien HELOC and a First-Lien HELOC. Okay, so this right here is the second lien HELOC, and this right here is the first lien HELOC. Don't you want to be first? Let's get to the chunking principle now. All right, folks, full transparency, mortgage means death pledge. All right, so that's why I put it up there. $200,000 at 6%, and you're paying $1,200 each month on that. This is how it's divided up, and this is what we really want to look at here. 400, and I'm being very generous, 400 goes to the principal and 800 goes to the interest, let's say, okay? And If you chunk, though, if you believe in the chunking principle, what can happen is that more would go to the principal and less would go to the interest, meaning that that principal amount is what you'll be paying down, what that money, that $1,200 will be paying down. Okay, it'll go more towards the principal, which means you'll be able to pay it off faster, which means you'll be able to build wealth even more rapidly. Okay, so let's go ahead and just make sure that we are implementing the velocity banking strategies. Of course, if you need help with that, don't hesitate to get with us. However, this is how it is. You see, if you get the $15,000, let's say, and you chunk this down, guess what? When the principal goes down, so does the interest, as demonstrated right here. And of course, this is just an example. And for those that are retentive, I know this is actually closer to $1,199.10. Let's go forward. Now, this section is going to be about the role of artificial intelligence in personal finances and in business finances, because many of us are in business. And I got a secret to show you. If you are in life, you're in business. That's all. From AI-powered budgeting tools to advanced debt payment calculators, right? Like the Money Max. These technologies can help individuals optimize their velocity banking strategies and make more informed financial decisions. That's what it's all about. Because you see, you can have a HELOC, right? You can have lines of credit, but if you don't have a plan, where do you stand? Okay. Now, if you have more questions on that, of course, that link is going to be right here. We'd be happy to talk to you about that. But just to give you an example here, you've got all kinds of loans, let's say, for your business or your personal, right? So you've got 25K here, right? You got 15K here, 10K here, 5K here. I mean, and the list goes on and on and on. Do you really want to calculate everything that you need to do? And I'm talking about the cash flow index model, right? Which loans am I going to pay down first? Or who am I going to pay the principal payment to? How do I divide up my income, which we don't want to segregate our income in the first place, right? If all of these questions are in your mind, you're wondering, man, how am I going to do this? Don't hesitate. Get with me, right? Because we have that solution. I'm using the solution right now. There are those that are using it. Shout out to Sharon, Jamie, Lisa, right? We're using the solutions because we don't want to spend all that time, right? Now, if you got time, great, right? But we don't want to spend all that time calculating and making sure that our debt is paid the right way, all right? Now, because of the massive amount of people that are utilizing the velocity banking method, there are banks that have shifted their priorities to the people finally, right? There are banks that are saying, wow, okay, so they don't mind using their line of credit in this manner, right? This manner that we are actually used to seeing the wealthy use their line of credit. So since that's the case, we want to open up new accounts. We'll open up sweep accounts. We want to open up cash sweep accounts. For shout out to Anthony and the bank that he's with, and Roger. They're doing that right now. And so the shift is going towards velocity banking because people's houses are being paid off much sooner. Car loans are being paid off much sooner. Student loan accounts are being paid off much sooner than the traditional banking standard, right? And so you can expect to see more of that in the future as time goes on, because anytime you have numbers, people are not persuaded by anything else and shouldn't be, right? If the numbers say, hey, you can afford that, then guess what? You'd get that. And so we want to talk to you about the future of credit and lending, because what that means is now that you're paying off loans, you're seeing that, man, there is actually a strategy that we can utilize, and that's other people's money, right? Other people's money is where we want to make sure we're building our name, our good name, showing them a plan, which, of course, if you're all organized, right, which the Money Max account helps you do, then guess what? You can actually put that plan towards that lender. You can put that plan towards your business partner. You can say, hey, here are the numbers. We've calculated it, and here's how we're going to pay it. Now, what's more powerful? A story, right? Or the numbers? And of course, you didn't calculate it out, right? but you did put in the time to just put the numbers in. And the computer, the system, calculated it out. Check this out. Solar, cardiovascular, respiratory, integumentary, right? Skeletal. What do all these have in common? They don't work without a system, right? It's called the solar system. It's called the skeletal system. It's called the cardiovascular system. And so with this system, we're going to put all of these, right, inside of it. And we're not going to work it out. We don't have time for, do you have time for that? Right? We're going to let the system work it out because we want to pay this off as fast as possible. Folks, thank you so much for joining. Thank you so much for being a winner and a velocity banker. If you have any more questions, right, don't hesitate. Give me a call. Give me an email, right? Comment below. You know I answer all of my comments. That's right. God bless and have a great night.